Hey, 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 everybody, it's Thursday, and we all know what that means. That's right, it's time for episode number 76 of the Real Deal Pod with Allister and Geoff, the real estate and mortgage podcast that is changing the rules all across Canada and informing all of us in British Columbia of what is going on. I'm here with my main man, Geoff Lee. It's a rainy, and a little windy Thursday afternoon. Geoff, buddy, how you doing?
I'm doing well. I don't know if we're changing the rules all across.
We're disrupting. We're a disruptor, Geoff.
We're informing
Okay.
all the rules across.
Informing.
Yeah.
Informing.
We're not changing.
Okay, informing.
Yeah.
Informing. We're disruptors, Geoff. That's the type of podcast that we are. We're disruptors. We're shaking up the real estate and mortgage landscape.
We're making you think about what's going on.
That's right.
Mortgage and real estate landscape.
That's right.
Changing the rules.
That's right. We follow the rules. Yes, we follow the rules. I was having a discussion with a client, or not with a client, but with somebody that reached out to us from the podcast, and they're not happy with what's going on with their property. So maybe we're their people aren't, and that's where the power team. I will just say, make sure you got your power team with you.
Yeah, we've talked about that lots.
So, buddy, how you doing, man?
Yeah, I'm doing well. It's been an eventful week. It just seems like things are flying by. I think the older you get, the days go by quicker.
Yeah, man.
But yeah, you know what? It's rinse and repeat.
Yeah, man. It's crazy. We are what, a month and a half away from Christmas already.
Yeah.
We are almost closing down this year, and I just happened to realize that I think a few days ago just how little time there is left in this year. This year has gone by so incredibly fast. So to your point, man, the time goes by quicker and quicker the older you get.
Yeah.
Yeah.
Absolutely.
Well, man, let's not waste any time. Let's get into it today because we got a few things to talk about today. So let's start off with the hottest segment in podcast right now, and that is
Did You Know?
That's right, Geoff. Did you know? So, Geoff, did you know that October brought in some welcome movement in BC's housing markets? But the story is very much still a buyer's market across the Fraser Valley and Metro Vancouver. So statistics came out, and in the Fraser Valley, home sales climbed for the second month in a row with 1,123 transactions recorded in October, up from 17% in September. Despite this, though, sales remained 16% below last year's figures, and inventory is still high with over 10,000 active listings.
Yeah, I want to jump in, but isn't September down from 30% the year before or something to that?
No, that's seasonal average on the 10-year average.
Yeah.
And so what we're doing, Geoff, is we're staying focused on positives, and we're staying focused on increases over the month to show that activity is starting to come up. We can't look at what's been going on 10 years ago. 10 years ago, do you remember what you were doing 10 years ago, Geoff? Geoff, 10 years ago, you had hair.
I did. I don't know. When I hear some of these stats, yes, you want to look at things half full versus half empty. But it reminds me of conversations with financial advisors. Mind you, these conversations are different today because the stock market is just going crazy. But It's like when the market's not doing well. It's like, you know what? We're down an X amount. You're down 17%, but the market is down 30%. So you know what? We're doing great. And then the next year, it's like, hey, you're up 2%. So over the year before, so congratulations. And I'm like, well, wasn't I down 17%? And then wasn't the market down 30%? Like, I know we're kind of trying to be positive here, but like I like to see the average to get a real good indicator as far as where things really are going.
Of course, but what I will say is if we had that theory back in COVID, that is why a lot of people waited themselves out, because if they weren't paying attention to the month over month increases and only paying attention to the averages over 10 years, they completely waited themselves out of a property because things went crazy as the months increased, which we will kind of get into in our next segment. So let me continue. Motivated sellers are which one of the things that has caused these, of course, these sales to continue to move is we now have motivated sellers that are adjusting prices, which of course has led to a slight softening. The benchmark price for a typical Fraser Valley home dropped 0.7% to $919,900. For single family homes, townhomes, and condos, benchmark prices fell between 0.6% and 1.2% on a month over month average, and 5 to 7% year over year. And so that's a big number because over the course of the past, over the course of the year, this month over month or year over year average, I beg your pardon, was only going down by about 2%.
Yeah.
And now over the past few months, we've seen that decline sharply. Homes now are still taking about 42 days to sell, slightly faster than townhomes that are at 37. Over in Metro Vancouver, slower sales combined with high inventory continue to favor buyers. They saw total sales of 2,255, which was down 14% from October of last year, and 14.5% below the 10-year average, Geoff. Yet new listings remain steady. A total of active listings hit 16,393, which was 36% above the 10-year average, Geoff. So listings are up 36%. So this high inventory is, of course, putting downward pressure on prices. The MLS Home Price Index composite benchmark is $1,132,500, which is down 3.4% year over year. Detached homes in Metro Vancouver are averaging 1.916 million. Townhomes are sitting at 1,100,000, and apartments are sitting at 719,000. And those are the statistics for Metro Vancouver and the Fraser Valley. So, Geoff, your thoughts on the market?
There's a lot of numbers. I was actually going to come back to you and say, can you summarize that for me in a few words or less?
So in the Fraser Valley, we're sitting at average home price value of $919,900. So if you take that, if you break that down into segments, we're I believe at 1.4 million for the detached homes. We're at 708,000, I believe it was, for townhomes, and 506,000. Is that what it was? I believe for yeah, it was right. That was 786,000 for townhomes and 506,000 for condos. Yeah. We're sitting slightly higher in Metro Vancouver. Metro Vancouver is at 1.9 million for detached homes, 1.1 million for townhomes, and 719,000 for condos. So, but all of them, as we know, are seeing reduced pricing of about 5%, 5 to 7%.
And a huge amount of inventory.
And a high amount of inventory. We are sitting at, what did I say, for
30%.
We are sitting at 16,393 listings in Metro Vancouver and 10,000 listings in the Fraser Valley. So the common story throughout both markets is high inventory, lower sales on the 10-year average. The difference being, though, is that October in Metro Vancouver saw a decrease of 14% in Metro Vancouver, whereas the Valley saw an increase. But we're still, of course, down below the 10-year average.
So the Greater Vancouver area saw a decrease in sales. Fraser
Yeah,
Valley saw an increase
saw an
in
increase.
sales,
Yeah,
and
yeah,
overall prices lower, inventory higher.
yes. Lower prices, higher inventory.
Sounds like the roller coaster ride.
Sounds like the roller coaster that we've been in for the past year. Yes, yes. But again, it's important that we do continue to look at these trends because as we'll get into, I know you wanted to go over some things in your segment, and we're starting off another segment leading in next, but um, a lot of it has to do with the biggest thing in real estate, which is confidence, which is buyer confidence. And so, what I wanted to talk about next, to not delay, which is going to start off our new segments, which is insights with Allister. I wanted to talk about the most common and most misunderstood question in real estate, and that is, when is the right time to buy or sell? Because that is really what we've been dealing with this year. And so it's a question I've been asked hundreds of times this year, I swear. And here's the truth. Most people don't need perfect timing. What I've realized is they need perspective. That is what they need. And so everyone wants to quote time the market, buy low, sell high. That's I think the thing that people have heard their entire life with stocks and everything like that. And it sounds simple. But here's what a decade. I'm leading up to almost a decade of my of in leading up, I think, to a decade in my career in real estate. And what it's taught me is you'll drive yourself crazy trying to outsmart the cycle. So markets shift and policies change, interest rates rise and fall, and by the time the data confirms a trend, you've already missed it. And this is kind of goes back to what I was saying in the COVID time, right? Because the first 60 days in COVID, when we entered COVID, nothing moved, right? And then all of a sudden, things went out of control. So if we were sitting there and looking at trends and looking at data and looking at 10-year historical averages and this, that, and the other, you missed it. You were completely, you literally were left at the starting line while everybody had already finished. And so that's why I wanted to rewind a little bit and look at, if you bought a home in Metro Vancouver or the Fraser Valley in the early 2000s, say for $300,000, let's just say, right? That same home today could be easily worth over $1 million. But what's important is you could have bought a home at any point in the last 20 years. And even at a quote unquote bad time, you'd still likely be ahead. Wouldn't you agree, Geoff?
Oh yeah, absolutely.
Right? And that's because BC real estate, especially real estate here in BC, it rewards consistency. So yes, there are dips and yes, there are slowdowns, but over time, demand driven by population growth, limited land, and immigration has created an upward curve that's stronger than any short-term correction. And that's the big lesson. Don't chase the perfect moment. Commit to the right plan. So I wanted to quickly talk about the emotional side of timing, because that's probably one of the biggest things. So timing the off market is often less about strategy and more about fear. It's fear about overpaying, fear of missing out, fear of making the wrong move. But here's the irony. Waiting often costs more than acting. I've seen buyers delay a purchase for 6 months hoping for a price drop, only to lose more in rising rates than they would have if they had gained in a discount. And wouldn't you agree, Geoff? Would you agree?
Well, what I'm hearing is actually, as you were saying, people who wait usually lose.
Yeah.
Was a podcast that I was listening to, is that if you take a look at anyone who is truly successful, they 80% will always act on not everything that they need to know, but enough to know to move forward. Whereas the ones that need to know 100% of everything usually will lose out on the opportunity, right?
That's exactly it. And so that's the other thing that I was going to say is on the flip side, I've seen sellers hold off on listing their property, right? Only to find themselves in a slower market later on when they do decide to come up and list. So what I wanted to emphasize to people is that real estate isn't about predicting the next 90 days, right? It's about positioning yourself for the next 9 years. And that's more about what it is. It's about doing right now to position yourself in a better place in the future.
Mm.
And those are the insights that I wanted to share today. So that's my insights with Allister, Geoff.
Insightful.
Thank you. Do you agree with those insights?
Yeah, there's a lot of common sense there, and yeah, absolutely, absolutely. It's a good news segment, and I'm looking forward to the next week's segment of
Well,
Insight.
thank you, my friend. Thank you. And thank you to my client, actually, that pointed out that they would like to hear a few more insights. And thank you to the unfortunate reach out that we had was somebody that wasn't happy with what that was going on with their home. And because they weren't under contract, because they were under contract, I couldn't discuss or help them with their quandary, but they were listening to some back episodes of our podcast, and we're hoping for a few more content, a few more insights. So hopefully, we're doing our listeners proud by adding this in.
Perfect. Well, you know what? Mine is a little bit of a segue into your stats report as far as how inventory is doing.
Beauty.
And I kind of wanted just to have a conversation with you about why people are resisting to buy in 2025, right?
Goes back to market timing. They're trying to time the market, Geoff.
Yeah, again, I listened to it was a 5 minute podcast with Gary Morris, who's the owner of the Dominion Lending Center Group. And the moral of the story, actually, sorry, it wasn't Gary Morris, it was Darren Hardy. And Darren Hardy said is that people who wait and need to know everything before they act will always typically lose on opportunity. People who know 80% of what needs to be known and will act on something that they're interested in, they're usually going to come out ahead. So what that meant to me is those people that need to know every single detail about what they're going to buy is going to lose opportunity versus other individuals that will say, you know what? I know 80% of enough to know that this is a good deal, pull the trigger, and then they are that much further ahead, right? So
Right.
to your point, is that when you're trying to time that market because you need to know everything or everything needs to line up, you're usually timing yourself out of that market, right? Versus people that need to know only 80% to know that, hey, this is going to be a good investment or a good opportunity. They pull the trigger and typically they're coming out ahead. And again, we can take a look at the 10-year prices of homes that you just spoke about. If you bought a home 10 years ago, you're in a much better situation than if you didn't buy a home 10 years ago, just based on the equity position of where real estate went.
Yeah.
So this goes back to, the conversation that I want to have with you, Allister, is like, why do people in 2025, they're not ready to jump into the market. And I want to kind of break things down maybe into four kind of reasons why. Number one is rate, right? What do you hear on your side all the time with rate? Like, what are your
What's the rate?
clients telling you?
That's it, Michael. What's the rate?
And more, at times it's like, well, I want, your rate is 4.09%. Oh, like my friend's rate is like 2. 1%. Well, yeah, that rate is coming from COVID, and that rate is probably never going to be seen again for a very, very long time. And then, they follow it up was, I want to see the rates go lower. Like the rates are going to crash, the rates are going to go lower, because this is what I'm hearing from my friends. This is what I'm just hearing, that the rates are going to go lower. And I think it's really important for people to understand, folks, we are in the second lowest rate environment that our country has ever seen. So if you're waiting for rates to go lower, there really isn't, you really don't have to wait. We are in a very low rate environment.
You know what's funny, Geoff? So we discussed that a few pods ago on the real estate end in terms of when people look at the crash, right? We are at the second biggest adjustment that this country has ever seen. So it just kind of goes hand in hand. We are in from a rate perspective and a correction perspective, there's really not much lower that we can go.
Yeah. And yes, we can go lower, but is it going to be a significant amount? I don't believe so.
Right. It's the same with the drop in sales.
And that was the other thing, is the second thing, while I'm waiting for the market to crash. Remember, these are the words that people use. I like the word correct, right?
That's why I said adjustment.
I'm waiting for the market to crash. And to your point, we are in the second slowest market that our country has seen. And also one of the longest periods of it being slow.
Yeah.
I think it's the longest that our country has seen.
We're approaching it.
Right. So if you're in that sandbox and saying, hey, I'm just waiting for the market to crash, well, you were here.
Yeah.
The market has corrected. We are statistically in the second worst market to purchase a property, right? Which is actually a great thing for a buyer, not necessarily for a seller, which to your statistics, we're up 30% at sales. I think you were saying over, was it a 10-year period or 17%?
No, we're down 30% in sales over a 10-year average.
As listings, I'm talking about inventory.
Inventory. Yeah. Inventory, we're up. Yeah. By 36%, Metro Vancouver was.
So it's a great time to buy because the market has corrected.
Yeah.
It may not be the best time to sell because our market is so slow.
Yeah.
Right? So again, those two things, I'm waiting for the rates to get better. Well, we're here. We're in the second best time for you to buy.
Yep. We can't go back to 1980. So we're actually in the best time.
I'm waiting for the market to crash. Well, we're here. This is a great time to buy.
Yeah.
And then, people say, well, you know what? I'm just going to wait for the next Bank of Canada announcement. That's the third thing that we hear all the time. Mm-hmm. And yes, folks, our next Bank of Canada announcement is December 10th. And then we have 8 other ones coming into 2026. So remember, the Bank of Canada meets 8 times a year. Our last meeting is going to be December 10th. Well, I'm going to wait until that Bank of Canada meeting happens because I think rates are going to go lower. They went lower the last announcement. They stayed fast. The announcement before, I believe, they went down. Like I think we dropped about 6 times. 6 times in the last 8 announcements of our overnight lending rate dropping. I will always say to somebody that says, well, are you looking to do a fixed rate or a variable rate? And if they tell me that they're choosing to do a fixed rate, as well, you don't need to wait for the Bank of Canada announcement to come because it doesn't impact a fixed rate. It impacts a variable rate. And here's the things that I say to people who are choosing a variable rate. Well, if it goes down, you're going to get that discount when it comes anyways. Just like if it goes up, you're going to get that increase, right? So if you are waiting for the Bank of Canada announcement and you are thinking to do a fixed rate, you don't need to wait for that Bank of Canada announcement in order to move forward. And here's the last thing. Fear. People are in a state of fear, so this is why they're not buying, right? And they are in a state of fear because our media, that's what they sell. They sell sex and they sell fear. Yeah. So yes, there is conversations around tariffs and what that tariffs are going to do to our Canadian economy. And a lot of economists will now say that Canada is now in a recession. And again, if Canada is in a recession, here's the good news for variable rate mortgage holders is that that's typically a good indicator that our overnight lending rate is going to continue to drop, because if we are in a recession, they want to stimulate buying. So this is good news if you're in the housing market, right?
Yep.
So there's a lot of fear that's out there, and you know what? That's warranted. We have a lot of discussion and uncertainty with what's going on with tariffs. We have a lot of discussion about household debt and cost of living, which I feel that's a verifiable excuse as far as maybe why you shouldn't get in the market, because we've talked about household debt, we've talked about the cost of living. So to me, hey, if that's one of your reasons why you're not in the market, I'm not going to argue with you much, because every household debt, everybody's cost of living is a little bit different as far as where you are,
Yeah.
and who you are.
Yeah.
But folks, if any one of these reasons or excuses why you're not buying is I'm waiting for the rates to drop, I'm waiting for the market to crash, or I'm waiting for the next Bank of Canada announcement, there is no reason for you to continue to be on the fence. This is a great opportunity, a golden opportunity for you to get into the market. The rates are where they need to be. The market is where it needs to be. And to be honest, the Bank of Canada announcements are where they need to be. So that's where I'm at.
I think I think that's all valid. And I think that it really boils down to, you can really boil that all down to one thing. And I think that what we're missing, or what we don't have right now out there, is confidence.
Yeah.
And I think that all of those things put together really shows that people right now just don't have confidence, right? Because when there is confidence in the market moves, and it kind of rolls back to, I'll use COVID as an example. In the early days of COVID, for those 60 days, everything was at a standstill, right? And then all of a sudden, rates dropped. They dropped interest rates and all those things, and then boom, right? People started buying, right? People started listing, people started buying. It created emotion, and people became confident in what they were doing, right? And so that's what we're not seeing right now, because of those fears in those fears in tariffs and misunderstanding. We're not going to get into it. We talked about it offline, and this is one of the reasons why we're not going to talk about it, is that tariff talk is so complicated. We don't want to miss things and spread what could be misinformation. Whereas when you talk to your friends about tariffs, if they don't understand how tariffs work, they are going to put you into a fear and misunderstanding that you will have a hard time getting out of, right? Just talked about it. The media, they sell sex, fear, and drugs, right? Like, so there's no confidence. It's easier for them to talk about the negative things going on in the real estate market, because again, that is what sells. And that's not going to, and all those bad things aren't going to instill confidence into you. So confidence really is the oxygen of real estate. And if there's no confidence out there right now, all the oxygen is sucked out of it.
I wanted to leave off with a comparison for people. Like, I think this is a great thing to kind of end our podcast on. Right now, Allister, how much inventory is out there for condos? It seems like for housing, there is tons of condos that are out there.
There's a massive amount. We're at 10,000 listings, so let's just say a good, at worst, 50%. I'm going to say it's about 65% of those 10,000 listing is condos, but let's say 50.
And this is what I want to leave everyone with. If you were to buy a condo back in COVID, that condo, a condo would cost you 650,000 ish. The down payment on that would be about 35 grand. let's say the rate you're getting at that time is about 2.25%. Your mortgage payment is going to be $2,786. Okay. And remember, this was a time everybody was buying like it was Black Friday and Boxing Day.
Yep.
Keeping in mind, Black Friday, shout out to Black Friday this week. Now that same
this week?
Yeah, Friday, I think. Anyways, don't distract me. That same condo in 2025 will go for roughly $506,000. So that's a down payment of $25,600. So right off the top, a buyer is going to put $10,000 less than what they had to do it in the COVID. Now let's say that rate is about 4.09%. The payment on that purchase, which is a lower purchase price than COVID, it's a lower down payment of $10,000 than COVID. It's a higher rate than COVID, and your mortgage payment on that is around $2,600 versus if you bought it in COVID was about $2,800. So again, if any of these reasons for anybody purchasing a condo here in the Fraser Valley area, in parts of the greater Vancouver area, if you are on the fence because of rate, if you are on the fence because of you're waiting for the market to crash, there's no reason for you not to buy, because when everybody was buying when they were confident, that condo would have cost you more. You would have came in with a higher down payment. Yes, you would have had a lower rate, but your mortgage payment actually would have been bigger than what it would be today.
Right. And that's what everybody needs, is clarity. That's one of the steps to bringing back confidence, is getting clarity. So thank you, Geoff. That's amazing.
You're welcome. We're done.
That's it. So that's what you got for us today?
Yes, sir.
That's amazing, my man. Well, thank you all again for sitting and listening to us today. We hope that we brought you some valuable information today. Geoff and I always say it, our goal this year, and like I said earlier, this year is almost over, but our goal this year was to double down on bringing you the best content and the most helpful content that we can, because this year, again, as we said earlier, has been a roller coaster. And really what we're trying to do, guys, is starting to build up that confidence, right? We just want people to have confidence in the decisions that they're making. Make sure you've got that power team around you, as Geoff and I always say, that's making sure that they are building your confidence, giving you the right information so you are confident in those decisions that you're making. Join us next week for episode number 77. In the meantime, continue to like, love, share us, tell everybody you know about us. Continue to drop us your comments and your hopes and your desires for what you'd like to hear in future episodes. And most importantly, as we always say, stay empowered, stay informed, and Geoff,
stay tuned.
That's right, baby. Stay tuned. Peace out.